Ah! What are y'all doing? Huh?
Nothing.
He's
We're
mad.
good. Are you okay, brother?
Down a notch.
He's mad.
I am triggered. Triggered. I'm triggered by the stock market. I'm triggered by the 3 people that work with me here. I'm triggered by everything and everyone.
You're
Thing
welcome.
hasn't even started yet.
You're welcome.
Oh, let's get this party started, I guess. Who wrote this
Darren,
thing
do you want to
again?
create the agenda so you're less triggered?
Who wrote this? I don't know, man. I I added to that agenda. You saw my notes. I think they're longer than yours after you you laid it out there. Oh, by the way, who is this stranger? We have Daniel back from the dead. That sounds like a horror movie. He is.
I mean, I feel like I'm back from the dead.
The zombie is alive again. He is the ex-institutional wealth manager. We have Josh Morgan, aka JP Morgan Chase, and then we have Royce Wells, our CEO, founder, and programmer and coder extraordinaire, with the Reebok hat on. We are not sponsored.
We are not sponsored
by Wendy's, or
by Wendy's
Reebok.
or Reebok. But hey, if you guys want to, we're here. We're here.
That's right. He's got "Where's the beef" in the back if you can't read that, or if this is, if you're watching the clips, it sometimes it cuts out that part of the.
Maybe I get some handshakes from Tiger Woods or something.
You do look a lot like him. You do. Are you? That's the 18th hole, final day.
Big Sunday red guy.
Yeah, except for my son works for Nike. He's not wearing the Nike apparel that Nike.
It's tailor made now, right?
Tiger Woods. Yeah, right. That's right. That's right. He's jumping ship. So let's do a few things here. By the way, I'm Darren. I am the resident retail that always gets ganged up on by these 3 guys.
That did not sound good. I'm glad he corrected that.
If they ever try that, I have a bunch of poo I throw at them to get them away from me. All right. So don't. I see your face, Royce. Don't do it. That would not be becoming of Tiger Woods. All right. So
something coming.
So we are not.
Oh, I have to hit something first. Oh.
These guys have OnlyFans page. I don't. I'm just kidding. Oh, we're getting dirty now. So let's move on. We are not
feet, guys.
Yeah, we're not Matt Rife. We're not Matt Rife. We don't need that heat.
I only have a 10. We are not financial advisors. This is not financial advice. This is not life advice, evidently. And this information is provided surely for educational and entertainment purposes only. Please always consult an investment professional before making any financial decisions. Our only professional here is probably, I guess we could say Pips is the only professional in the house, but still.
No, Daniel.
he just guides. He has no degree or anything like that. All right, let's get moving on.
The first at least. I mean, hey.
All right, this is what triggered me. The very first subject, our little institutional guy who claims he doesn't talk to him anymore, but it sounds like they're sending him notes to put into this thing. And the title is, "We Are So Back." All right, so I'm going to give a precursor to that. What I think he means is that we took that big dive with the carry trade down to 10% or so. And now since then, we're back up over 8%. So we're almost back like nothing ever happened, which is basically what has been happening.
That is not true. Japan is still suffering. Japan is
exactly
2,500 down from that fall.
I'm sorry, Royce. Do we live in Japan?
Oh no, but we definitely root for Japan.
Yeah, if you ever need to send somebody over, I'll volunteer.
Right?
We're still waiting on the other shoe to drop, in my opinion, on that. Plus, there's lag effect.
That Elliott wave to complete itself.
It's lag effect. We've had a 3-year lag effect. We're just waiting for it to, let's say since last October at least. But this lag effect, everything is just being pushed forward, in my opinion, and they're waiting for a certain time. Maybe it's after the election. Who knows if they're just going to let it all fall apart? I
would love to see it fall apart days before the election.
Well,
everyone's at the polls, all of a sudden,
that's fine. That means you have like 3 more months of up.
Hey, I'm not complaining.
That's some glass half full stuff right there.
Yeah.
So
I'm just saying, take advantage of it while you can.
Royce, what happened last October?
Well, it was actually November the 1st. November the 1st, basically things rebound really hard. At the very end, last day of October, triggered the sell signal on almost all of my charts and then did a huge ricochet. And basically just kept climbing until we got to almost late March.
So you remember that, do you?
Maybe, just a little bit.
So longest winning streaks. What did you say? Institution. Since what did they send? The bullet points they sent over to you. What did you say about this?
So it's the longest winning streak of the year with 8 days, and so we're from the previous top. We're down about 1.3%. So we're pretty close to back, Darren.
Back to what? All-time highs. You got to say all-time highs after that.
Oh yes. Sorry,
I'm helping you out here. I'm helping you.
Like I'm Jim Cramer. And if you remember, 8 days ago, people were calling for an emergency rate cut. Now nobody is.
Right.
And if you want the other nice little numbers that they provided me, inflation is down, albeit not very much. It's like 2.9%. And that's if you believe the number. Joblessness claims are down.
The numbers are always solid, and they come in and they never change.
100%.
Yeah, they don't revise it later, and then it's way off, right? Retail sales rose 1%, which we'll talk a little bit more about later.
Because they raised the prices.
The speculation is, that's not sales not raising.
This is brought to you by Gain Detergent. And we're in the spin cycle right now, the big time spin cycle. Your clothes will be ready soon. So, I mean, again, I've repeated this. I won't repeat it again. We won't talk about it at length, but you still have the rest of this carry trade that's going to happen. It's just where and when. Other
what
things.
Makes you think that, Darren?
Just because I'm
going to poke that bear.
There are others out there that believe this actually, but you won't hear them on the major media networks because that would be a no-no. They don't pay them to go on those shows. But this big, what I call the black swan ninja of all these things are just.
Didn't Japan say they weren't going to raise the rate?
Of course they said that. Yeah.
So they conceded. So what's there to unwind?
Unless they have to. I mean,
so what's going to unwind?
That. Okay.
Yeah, I mean, I'm not saying that it's not going to be something that's going to happen, but I don't think the carry. I mean, I think the carry trade was really just kind of a little bit of smoke, not really something that with as much substance. And it's even what we talked about last week, where there's a lot more nuance to the carry trade. And honestly, you look at the numbers now, the margins are a little slimmer, but the carry trade still works. It's not like it went upside down or negative. You can
oil a few years ago. That was a nightmare.
Right.
We're going. We did talk about that at length last week, so we won't stay too long on this one, the carry trade thing. But I expect we will be talking about it in a future week again. The other thing to add in here, and I want to hear Royce's
to the moon.
I want to hear Royce's opinion on this one, is because he may not have heard about this one, but we are back in the same, in some ways, back in 2008. One more thing came up that is like that. So here we are.
Okay.
Off balance sheet debt, the mega banks, 192 trillion in derivatives, and I'm going to break it down for you. Because here we go. I bring facts.
Let's see these stats.
Darren just wants his time in the clips.
The top four, but if you guys delay it, it won't pick it up. All right, so the top four commercial banks in derivatives at the end of the year last year. So I didn't even count the first half of this year. So I'm sure it's done nothing but go up. Total assets for Goldman, which is number one, 52 billion. That's their total assets, right? Derivatives, 54 trillion. Interest rate derivatives are 40 trillion. So I'm assuming that 40 of that 54 is interest rate derivatives. All right, JP Morgan, number two, total assets 3.4 trillion. Derivatives 50 trillion, interest rate derivatives 44 trillion. Citibank, number three, this is the one I think is in the most danger, is total assets 1.7 trillion. The derivatives are the total derivatives 46 trillion. That's a big chunk difference. Interest rate derivatives 26.5. So that means they're the ones that have the most, almost 20 trillion of non-interest rate derivatives. So, what could those be? The last one is Bank of America, which us apes also love. We love Citi and Bank of America, by the way. Total assets 2.5 trillion, total derivatives 18.5 trillion, and total interest rate derivatives at 12.4 trillion. So just from these, if we add them all together, and this is just 4. So who knows if you add the rest? From these 4, total assets 8.1 trillion, total derivatives 168 trillion, and total interest derivatives 123.5 trillion. So,
okay. So
hearing those, that's what I'm going to ask you. What do you think? What could that mean? And the fact that the article says, wow, this is just like, or actually more or worse than 2008 in that specific area, and this is only listing the 4. What's your opinion on that, Royce?
I think personally and professionally that, hey, if you are able to maintain the house will continue to be built. Meaning, at the end of the day, the reason we got in trouble with derivatives is basically it was a perfect storm. The banks had to start defaulting because the people started defaulting. It became a domino effect. If there's no one defaulting, if they're able to keep the interest rates where people can still afford to pay them, even if they have to get help from even subsidies from the government to help people keep their houses, they can keep this dialogue going and just keep kicking the can until we get a new president. So does it have to basically suddenly, like tomorrow or next 3 months, fall? No, of course not. You have to basically see people starting to default to kick the first domino over, then maybe you'll be in trouble. But derivatives in and of themselves, hey, that's how you basically, things are spawned from things mutating. You get new things from those derivatives, and you find new vehicles to drive. It's just business. It's not crazy. And to be fair, about 66% of their revenue is from interest-based revenue, which means, hey, if they've been raising the interest rate, that means the banks are making pretty good money on that interest-based revenue. So they basically they're betting on a winning horse. So why not?
So what happens when these interest rates actually do start getting cut instead of just for 2 years?
Then they move to the next best one.
Yeah. So I think
moves.
Evidently, if you listen to business media, everybody really, really, really looks hard at that 2-year and tries to make decisions based off of that 2-year, or that's just the latest narrative, is they're staring at that 2-year bond as far as how making their decisions and what's going on really in the market. I did want to throw in, and because I had a feeling that's where you might go, that the number of U.S. bankruptcies currently under Chapter 11, which is the corporate, has jumped to the highest in 13 years. So I'm bringing, some more facts here, not just for Opus, that these bankruptcies have doubled in just 2 years. So what I do, and then credit cards are up you see delinquencies on that. You see people not able to pay their notes anymore on their houses. So, I mean,
where have you seen that? We haven't seen that as widespread news yet.
Of course, it's not widespread. It can't be. The media cannot start a panic. It's their job, in their opinion, and the people that fund them. They cannot start a panic, because that's when you get bank runs.
And just to basically also check your math, right?
Not mine.
14 years is not 2008. That's only 2010. The market was well on its way to recovering in 2010. So even with all of these numbers where they are, it was on the road to recovery with those derivatives and quantitative easing.
I'm just going off of the title of the article that I read. So referencing the title, not me, but the title.
I'm not attacking you, I promise.
But you are sounding like an institute now, saying, well, then everything's okay, because it only goes back to 2010 now. So I guess you got a bullet point now, too, from the big guys. All right, Banker, this is your category. So do you have anything to throw in there that we haven't already tackled to death?
Oh, no, just continuing on the parallels to 2007, the big major bullet points that caused, other than the housing related lending and things like that, where the market was extremely overvalued, housing market was very overpriced, and the unemployment rate was going in the right direction and then quickly reverse trend, which is what we're seeing with a lot of this and kind of coming back. So to that point, you're asking, what happened in October of last year. I'm a little bit more concerned about, what happened in October of 2007.
Yes, 100%. I just don't know if here we go. It's October's just the month that things blow up.
And it doesn't have to be all doom and gloom.
Halloween month.
A lot of those same things happened in like 2017, I think. And we didn't go into a full on recession. We just flatlined for several years. So it could just be going down that road, but there's a lot of economic factors to keep an eye on.
Well, the only other new thing that came out today that could have something to do with this, but they released back in March, they released the annual additional jobs number, if you will. And they determined today, which this is 6 months later, they said that, oopsie, we overstated how many new jobs were created over the last year from March of 24 back. It's really 818,000 less. So, oops, forgive us, please.
I can live with.
Yeah. That's what it is. So you divide that by 12, and then okay, that's your average per month. Blah blah blah. But still, that's a huge number, and that's also, you have Goldman saying no, it's more than that. It's over 1 million, because that, again, it's another survey. So I mean, it's. I just wish we could have facts. We could deal with facts here, but we don't. We have to go with speculation, and I don't know if I believe any facts anymore. But I mean, as far as Royce, I mean, knowing it's 818,000, not million.
Yeah, not million. I'm like, hold up, there.
Does that change any thoughts for you about what's going on now? I mean, any comments there, and then we'll go to Daniel after that.
Well, I'm doing this a little tongue in cheek, so
pick a side.
From my perspective, that number. What I am actually happy about from this point of view, specifically this point of view, is that they actually go back and correct the numbers. They don't leave them and just say, hey, and just change them on paper and never make the announcement. So the fact that they're actually going out there and like saying, hey, we made a mistake, it was this far off, now notice it didn't impact the market at all. They made that announcement this morning. It was still business time.
There's a reason it didn't impact it, because that falls in perfectly with, now they're saying that the rate cut should happen for sure now, because look at the labor market isn't as strong as it supposedly was. So now it's even more likely that the rate cut will happen, and maybe they'll even some crazy people saying 50% or 0.50%.
Yeah, 0.50, it has to fall more. If you want that number, it has to fall more. You have to give the Fed a real reason to cut. But like, everyone's making money. Why would you suddenly say, oh, I want to accept less money? Who does that?
Yeah. It's still a revision of a survey. So it's like a revision of a pile of, anyway. Again, just to fit a news item today to move the market up instead of down. So in my opinion. Daniel, anything else to throw in there? Did we already put the kitchen sink in?
No, I mean, I think
okay.
I think my only thing is, at the end of the day, regardless of what happens, will it be up and to the right from now? Will it be volatile? It'll probably be one of those two. I don't think it'll be down right now, but I do think going into the election, it'll be a sell the news and potentially buy the event situation. I don't think, I don't want to get super political, but like, I don't think Kamala is, like, you could say, great for US politics, or not politics, like economics, but Trump scares global economics. And so how that affects us, I think kind of depends on, who wins if it's like, a buy the news and it's like we drop a little bit and then like go up or like go the other way. But I think going in regardless, it'll be a bit shaky of whoever's leading in the polls, if you believe those. Who the hell takes a poll? But
we've been talking about that.
You don't believe them?
Like, what the hell?
I have not taken one. It's all over X right now. There's questions. People are saying, "Have you ever taken a poll before?" And everybody's like, "No." Have you? No. Have you? Now, one person.
And listen, I'm from the age cohort that doesn't vote, right? So like maybe
you're not
I'm
going to
just
answer a phone call.
Yeah, well, I mean, I don't. I'm registered as like independent, so no one's gonna call me, right? Because they like don't know the answer.
He could go either way. We can't call him.
Exactly. Like, why would they call me for their biased poll?
Anyone that hasn't given my phone number and sends me something that says, "Hey, tell me about this candidate," I'm like, I didn't give you my information. Report.
Or you get the text.
Report.
Hey.
Don't care which side. Report. I'm like, I didn't ask for this.
And by the way, you remember Social Security, the data issue. So everybody's got names, numbers, all that good stuff out there. So maybe it was a run up to the election. Maybe that was on purpose. I got the hat right here. I have to show. Oh, can't see it. There we go. All right. So let's move on. And that was a good, you talked about China. So we will move right in, or you talked about world. Let's move right into the next subject, which is that basically, what's going on, man? It needs a life support system or something. Kind of talk to us about that and start us off, Daniel, with your comments on the China economy.
Yeah, so the Chinese stock exchanges have stopped releasing real-time data on foreign fund flows. So this pretty much just deprives investors of information of like where international traders are moving their money within the Chinese markets. And so far this year, $8.3 trillion have moved out of the Chinese stock market, which is like insane, right? Like, what is that? Like the market cap of like the Mag 7 collectively out of an entire country. And you know what? I forget what China is, but they're, down like 60% year to date kind of situation. The government has stepped in that I believe you can't short sell anymore. I don't even know if you're like allowed to sell your positions anymore. This is probably the most strict example we've seen of, countries kind of, I should say governments playing into their stock market of what can and can't be done for the bad situation. I read a narrative a while ago that China doesn't care about the stock market because it doesn't impact them as a power. But I think they are starting to see that even though they, to some degree, maybe don't care about the stock market, they are starting to see that it is, creating unrest in their people. And when you have a bad market that, when it hurts their people, that it hurts their position of power in the country, and that they're starting to realize that they do need to have, at least a decent stock market as well. So yeah, that's what China is currently up to.
Yeah, and of course we remember, and I've talked about this before, the parade of politicians that keep going over there. I have no doubt it's all about money, and it has nothing to do with anything but money, in my opinion. Like social issues, they don't care. It's about money. I'm sorry, I said that. Yes.
We will get canceled. I'm waiting.
Yeah, probably. In fact,
I don't think our audience is too big in China, considering they don't have YouTube.
But your comment, though, right, is that, but Google's big. Your comment was about transparency, and somehow I'm supposed to think that it's different with our stock market and Chinese stock market. But I'm sorry, I just don't think it is. I think we're trying to make some transparency moves, but we're not forcing things like they do there, but boy, we sure are about it.
You really don't think we're more transparent than the Chinese stock market?
In some ways.
I'm sorry, but that is the dumbest comment you've ever made.
In some ways. No, not total, but in some ways we hide things over here too. And and we're trying to create some regulations that show us transparency. But I mean, we have transparency issues here. I mean, that's my basic commentary.
I would say we're definitely not great, but we are the cleanest dirty shirt.
Yeah, okay. I will agree with that.
Let's go.
That's a good way to put it.
I'll go with that. Yes.
Yeah.
I will. I'll go with that.
I mean, I think China, like, from a lot of like what I've heard, is like just become uninvestable, right? Because if you don't know where money's moving, you don't really know how these firms are accounted for. I can't remember the name of the company, but there was that coffee company a couple of years ago that like essentially had. Sorry,
Luckin.
Was it Luckin though?
I think so.
Okay, I thought it was a different one, but regardless of who it was like billions of dollars they were claiming in revenue that was just complete and utterly fake, and they went from a market cap of a couple billion to just like $1 million overnight kind of thing. And it's just like things like that, lack of transparency, like fake numbers that are things skewed in projection in America, and yes, I know there's the whole like fund trading side to it. That
shell companies
have disdain to. Yeah, I'm like I said, it's not great, but I do think it is, like I said, the cleanest dirty shirt, and it is the only market that you still see people investing in internationally. You see all the small cap international funds, and you see that. I'm sure you've all seen that chart where we're at like the biggest disparity in the last like 20 years. And it still isn't coming back at all. Like that's been a narrative for the last 6 years that I've really been tracking markets, and it hasn't remotely closed.
I get it. Of course I'm going to exaggerate. Jeez, I mean you got to be hyperbolic, right? When you discuss things like this, especially when you're talking about institutions in the U.S. Anything from the banker or the CEO down there before we move on?
Oh no, I mean I honestly like it. I'm not saying it's a great move, but it does make perfect sense. I mean, you got to think about, just to boil it down to something stupid, you think about what your parents told you when you were a kid. Like, if you don't have anything nice to say, just don't say anything at all. So, and they've had, I mean, it's been on a downturn for so long, and it's not just like one particular play, it's the market as a whole. And Chinese government controls all of their money, despite it being called the people's money. They control all the money, they fund it. Everything is under their control. And yeah, at that point, they're just kind of saying, look, there's no reason for us to continue to tell everyone that things are not working out.
It's set up for it. They can rug pull anytime they want to, and just all they got to do is one morning go after a CEO. Remember when they were going after CEOs to bring them in to talk to them and question them because they're making too much money? It's almost sounds like the mafia, doesn't it? It's kind of what it kind of resembles. That it's like I got to control all of this money, including all the corporation's money. Anything else, Tiger Woods, before we move on?
Oh yeah, okay. I got you, brother.
I had a feeling.
Guess what? China's about to rally hard.
That's what I'm saying. They're doing this.
Yeah, you can't sell their stock. The only way to go is up.
It's all the bad news, though. I agree with you.
How much did you have to drink before you came on air?
No, it's true. It is true.
I got charts. Matter of fact, my crayons will literally show the Chinese futures about the rally.
The average, they're getting their averages down, and they were making all their money on these puts, and now they're ready to go up. That's what it's all about. I know. So you have a chart you're going to show now?
Oh yeah, I got crayons. If you're ready for crayons, if you're not ready for crayons, we can hold it. And
there is no set rule. I think if you've got it, it makes sense here. So hang on, let me. I don't have music to cue, but I do have graphics. There you go, crayons and charts by after.
All right.
Or by Arbitrage.
All right, now let me go into this and properly frame it. I won't say.
Right, what are we looking at, Royce?
We're looking at CN1 exclamation on TradingView. That is the China A50 Index futures. So it's sort of like the S&P 500, but for China, right? And in 2021, basically, they went outside of the arbitrage man system roughly around January 25th, right about the time they lowered our credit rating. Don't remember if you remember that or not. Actually, it happened, I believe, exactly on that date. So that was a very good thing. But since that moment, all they did was sell off. This is on a weekly chart. So all we've been doing is watching this thing fall, right? The good news and the bad news. The good news is if it actually rallies, you can get back up to almost 15,000 from 11,000. The bad news for China, basically, the last fall that started began about 5 or 6 weeks ago when we got that red X on roughly the 22nd of July, and we've been falling. But you notice there's a hook to these candles. Looking back at that hook, the arbitrage band from basically where we started falling in June 5th of this year is getting in position to actually begin a brand new rally. What could potentially hold it up is that one pink line that's sitting out there at 12,168. So that means that's about 500 or 600 points from where we currently are. So we may see a little bit of an uplift, but from where we are, or it may even bounce off of the black line. We want to see. In order for us to get what we want, though, I do believe there has to be a little bit of a fall, and this is why. Basically, volatility has stammered out more or less, for lack of a better word, petered out, and it's basically for us to get over that line, we actually have to drop and hit roughly around 11,650, which is not very far from where we are. Just hitting that mile marker should allow probability to expand and allow us to be ring in a brand new Chinese bull market. That's all I got.
So that's an index, of course, or a ETF, I guess. And so the trick will be knowing which stocks that are even available to.
Just look up the A50. You should be able, just like S&P 500, get the 500 that are in there. A50, they'll tell you the 50 stocks that are in there.
I know the institutions love for you to just throw it into an ETF so they can play with it. But I mean, if you're trying to do an individual stock, you gotta be a good stock picker in that case amongst the A50. So anyway, that was after the bell. After the bell, crayons with Royce. We'll just say that. I got to come up with something that I can throw in there, like some music and stuff. I will eventually. Let's move on. We've got.
You're an ape. We'll just throw poo and say next.
Yeah, what's the next topic? I want to call Darren an idiot
right.
again.
So next... All right.
I defended you, Darren. I defended you.
Oh, we can talk about you trying to defend me later on when we talk about the wages. So let's move on to the to Walmart, Wally World. I used to work at Target, so we were always like battling Walmart, but they're putting them in the same group now because of their earnings release. And then, of course, the institution guy just jumps all over and says, "Look at retail. Look how great they are." So give us the facts and figures on basically retail, Daniel.
Yeah, so for Walmart, with their earnings, sales increased 4.2% last quarter. Operating income jumped 8.5%. And digital sales rose by 22%, which I actually thought was pretty insane. And their CFO was saying that they're not seeing, the kind of consumer wane as a lot of people would expect with maybe some of the other data that has been coming out. And I actually, I'll share something personal, Darren. I feel that I find this quite funny as, obviously the numbers don't show we're in like a true recession right now per se, assuming they're reported appropriately. But like things feel slow. I don't know anyone that is like, oh man, like my wallet's hot right now, let me go spend. I saw some thing that was like 8 out of 10 millennials are like prepared to be fired in the next like 6 months or something. So Royce, I hope that's not true for me. But
nah.
We're all sweating that one. We're all sweating it. I'm not a millennial though.
Well, if he wins the next, after the bell, then he can say.
Oh, I'm fucked.
Talk about some heat.
You might as well start finding a new job.
Yeah, I know. I'll spruce up my resume. Because that ain't happening. Maybe I'll go. Maybe if we do a China trade, I'll go long China. I'll just pick the highest number I can.
There you go. Work for Josh.
Yeah. So I think this is one of those things where it brings into question, like, is there a soft landing here?
He said it.
So
I was waiting for him to say it.
Throw my poo to Darren to tell me that this is wrong.
I can see these triggered.
To be clear, not my narrative. This is Walmart's narrative.
Okay.
I don't shop there. We don't have those in Asia.
His fun friend narrative.
What about Target?
Yeah.
No.
I used to work for Target, by the way. I told you that.
Target.
Okay. So how much of that is because of inflation? The prices go up, therefore your sales go up. Then let's go a little bit further. They've done some price cuts recently. So let's see what it's like in the next quarter and see if all those price cuts actually took place and those sales automatically just magically come down because of the price cut. So it's certain categories that are probably being gouged right now that we can't. If Kamala has her way, she'll take you to court if you gouge people instead of supply and demand. Oh, wait a minute, that's stupid. That's political. Stop. Okay.
Oh, no. Let's talk
about that later. Hold on.
No. That's coming up later. Coming up later. I'm just throwing poo everywhere now. Okay.
And he's seeing what sticks.
Here's the other thing. Is to me, it's the step down again. You've got the upper middle class and even some of the upper class having to step down. They can't go to little boutique shops and they can't go to the expensive places like Whole Foods to buy their stuff. And they're coming down and they're stepping down. And this happens. They're stepping down to the Walmarts and Targets. So, I mean, if you look at like maybe your upper elites or lower elites, I should say, and upper middle, they're going to step down to Target. And if they need groceries, they might actually go to Walmart. So that's happening. Even the Walmart executives are talking about that happening. So I don't think it's as rosy as a whole macro event as what's being played up right now. Because if we look at what's happening at Home Depot and at Lowe's, their forward guidance is, and I'm surprised they're still doing forward guidances because like Apple and Apple products, they don't do forward guidance anymore because they don't want you to the market to move against them because the analysts will change it to no, the forward guidance is now lower. So when it hits higher, everybody celebrates. I've said that before. But my opinion is that overall retail is not what's being thrown out there as the narrative right now. And if it is, it's only because their prices were so high that the last quarter, they're still taking advantage of it. And now they're being told they need to step down or they're going to actually just lose business overall. Plus, we got to look at what's comping from last year because they got to keep up with whatever year-over-year sales are so that all the numbers actually work out for the narrative. So there's my conspiracy theory. How about Royce? Can you save me from my talk?
Yes. So do you know what's uniquely individual about Walmart? Any ideas? They own 0% of their inventory. Anyone that wants to be on their floor, they're paying to be on Walmart's floor. They're paying to put the prices there. And if it doesn't sell, they have to get their stuff and get out. So basically, it's not costing Walmart anything. And basically, when you run a business that doesn't have inventory, you can't help but make money.
You're saying it's all consignment?
More or less. Basically, how it works is like, say, for example, you have all of the Darren's cups of the world instead of Stanley's, right? And you say, I'm going to sell them at Walmart. They said, okay, we'll give it a shot. Send it to these few Walmarts. If they sell, they expand it out. If it doesn't sell, you get off the floor. It didn't cost them anything but time. They didn't have to get rid of the merchandise that didn't sell. They didn't have to ask for new merchandise. It's 100% based on how fast you can restock is whether you get to stay in their store or not.
So they don't write a PO to you until after I'm going to guess 60 days.
Everything is sold,
and then you only get what you sold. Yeah. Okay. I can see that. I'm surprised it's for everything.
But other big giants have been switching to that model because it basically saves them a lot of trouble. And basically, if it doesn't sell, you don't have to worry about, like Home Depots and Lowe's probably could learn a lot from how Walmart is constructed its business and probably get better numbers, just to be frank, because they don't have to worry about their inventory.
So they basically go to clearance if it's still there, or if part of the agreement was that we're not going clearance, we'll charge it back to you, and they get their inventory back, I guess. And then they'll probably sell it off to like a TJ Maxx or some other retailer Temu. Who, by the way, I don't know if you saw it, but she is
they're suing them.
They are suing them. Yeah, I guess you did see that. Okay.
Oh, really?
Oh, yeah.
Yeah. Practices. Yeah. We're not going to talk about it because we're not prepared, but I saw that. I saw maybe next week. We'll see about that. Yeah. He's like, oh, I got an idea for next week. Anything else, Banker, before we run on to the next?
No, I just don't understand how having zero inventory gives them an accurate measure of whether there's a recession coming or not, because if they don't care about their inventory, they should see.
Yeah, because all they get is profit. If it doesn't sell, it's profit.
That sounds great. That sounds great for Walmart, but Walmart doesn't speak for all of these various companies.
You know how many Walmarts there are?
They did this week.
I'm talking about all of these major companies that have been around for hundreds of years, and there's like, I think I saw 3,200 brick and mortar stores that have closed just this calendar year, and they're forecasting thousands more over the next few years. And those are real businesses that may or may not have stock, may or may not have their stock inside of a Walmart. So I just don't see how that's really a good indicator of whether there's a recession or not.
Okay, let's take it.
To me, it just seems like, again, smoke.
Yeah. Let's take it if you were running a restaurant, right? Your produce, your food, everything is only good for so much time. The more you have to carry inventory, things can go bad, and basically you're wasting money, you're throwing money in stuff that you couldn't sell. By them not having to spend the money on actually buying the inventory, that gets removed from their bottom line. So the only thing they have to report is the profit. And basically that's it, because the person that wants it on the floor, they're paying to put it there, and they're basically Walmart's adding their fee on top of their inventory fee and saying, this is what you sell for. You made yours, I made mine. We're good. If it doesn't sell, it didn't hurt Walmart at all.
That's exactly the point that I'm making. Like, Walmart's just going to, okay, well, your stuff didn't work, so I'm just going to replace you with something else.
Yeah.
We're not sitting there looking at, okay, well, we now can't seem to source this particular item or this particular brand, and it's been a staple of ours, so that must mean there's something wrong. They're just looking at it as, okay, well, this brand didn't work out, we'll just replace you with something else. No, skin off our back, and they'll move on.
Yeah, but sometimes if you're a big enough staple, you survive. Do you guys remember Twinkies? The U.S. government bailed out the Twinkie company because it was that big of a staple.
No, I think it's a perfect argument for exactly what Darren was saying. It's like, all it's going to do is, because all of these companies can't work out and people are going to have to stop at cheaper and cheaper places because the brick and mortar stores are gone, everybody's going to flood into Walmart.
Well, you also have to, pardon me, you also have to consider the price of goods, right? Somewhere it has to get cut. So like, say, for example, if I have a farm and I'm raising crops, those crops that I'm trying to sell have a limited shelf life. I mark it up 2 to 3 times its cost and sell it as retail to the people at Walmart. Walmart attaches their price to it, and it's good. But if you take 2 steps back, you can say, you know what? I really don't need this stuff to stay in my silos and on my farm, on my whatever. I will cut whatever I need to cut to make sure it goes to market, to make sure it still sells.
Yeah, I just don't see how that's Walmart's problem.
It's not Walmart's problem. It's the person who's putting the inventory on the floor. But once again, supply and demand, it basically goes up the supply chain, not down. The end consumer, basically, they see lower prices, not because Walmart cut them a break, but because the person who has the inventory is like, I got to move this. If I don't move this, I'm just going to be taking losses across the board. So
yeah,
they make it work.
It's the Mel Brooks said it in his movie. It's good to be the king.
Exactly.
So you can set the rules and benefit from them. So and I see that. I do see that.
But I'm also not going to
space.
ask a king for economic advice.
Not a king. I don't know about any
Ask the
politician.
concubine.
You mean Jay Powell?
Right. Well, okay.
Our Lord and Savior, King God.
That's a fair counterpoint.
He's the Burr King. All right. Let's move on to let's move on to a millennial topic here. No surprise here, but we're talking about Wall Street bets now. And so exactly, I'm getting to that. You'll like my take on this one at this point.
Wait, I gotta ask. Can we take a break?
We probably need to, but
I need to. No, I gotta. Give me 3 minutes.
3 minutes. Wow. Okay. Man, poof, he's out. See, all I gotta do is bring it up. All I gotta do is bring up that touchy subject, and he's going. I know he can hear me too, but I hope he don't hear him.
He's like, yeah, guys, I need you guys to pump this really hard tomorrow.
I don't know if I've ever
if you were a sponsor of this show, you could have 3-minute article or commercial right here if you sponsor this show.
Yeah, I don't know if I've ever sneezed so hard I had to take a shit.
Oh boy, there we go. Boop.
Yeah.
All right, but we can talk about it till he gets back just to see what line he takes. But Wall Street Bets loves Intel is the title of this next segment, and I have my take on this. But he said that it's the 5th most popular stock among individual investors last week, bringing in 162 million in retail flows. And that more retail traders were betting on Intel than Apple and Microsoft. So, where do they get these facts and figures from? I mean, where's it coming from? How do they know what retail is betting on? I don't.
It's speculation, but if you have anyone speculating, absolutely. There's no meat to this.
So, yeah, well, thank you, but it'll certainly pump Intel, won't it? Because here's the deal.
That's the belief.
We'll see. It'll be interesting to do the chart and see. Maybe that should be our stock, Josh, for this next week is Intel. But the thing is, it's to me, they've pumped all the other tech stocks. They're all near all-time highs or all-time highs, etc. Oops, we've got Intel in our positions. We got Intel in all of our 401ks. We better have some story to tell now. And so we'll talk about Intel now and say, wow, this is so undervalued now. We need everybody to jump into it. And look, all the retail guys are jumping into it, whether or not they are, because what's happened, and this happened and you know this, Josh, is that there was a period of time when Wall Street Bets was hot. Everybody's talking about it, especially the angry funds and media, that they took over. And there was this long period of time when everybody was saying, that's not us. That's a guy that works for the funds that's now in Wall Street Bets, acting like he is a Wall Street Bets person. So they've infiltrated Reddit, took over that, just like they take over everything else in the media, and now they're spitting it out like they're representing retail traders. Is that possible?
It's a narrative. Remember, It is an auction. How do you win? How do you escape with the money? You have to get someone to buy in so you can escape with the coins. There's only so much money to go around.
Do you remember any of that, Josh? When that was going around?
Yeah, absolutely. I mean, it happens in anything that gets popular ultimately gets controlled in some way, shape, or form. I mean, it's like all the, politics and Russian bot farms and everything else that's there. And I mean, Reddit's owned by China. They've got political reasons to influence things and all of that. And I have no factual evidence behind this other than, anecdotes from other people and what we've read and things like that. But, I don't know. I honestly wish we could get Chuck in on this one because, he's the disinformation. He's a disinformation guy. But
one of the other things that you guys might not realize, so basically we're getting to the end of the line with cryptocurrency, right? Bitcoin's about to be finished being mined. There are new types of miners coming out. You'll never guess what they're doing. They're literally prospecting the passphrases that makes up the cold wallets, trying to
yeah.
brute force the combination to the wallet so they can steal the coins from the wallets.
Well, of course.
It's not the worst idea in the world.
It's not, but there are literally countries and sovereign nations devoting tons of resources just to do this, which makes basically crypto not so safe a place, or maybe they need more than 24 passphrase for a cold wallet.
And as we make the computers more and more are stronger,
Yep.
the quantum computers, right? Now it's going to be even easier, to break down those 24 passwords. I don't know. Daniel, I don't know if you heard all that while you were taking care of business or anything, but I don't know if you still had your ears in. But anything you want to add to that? We were just talking about how Reddit pretty much has been infiltrated by we'll just say paid assassins, and took over Reddit and and are trying to represent retail. So anything that comes out about retailers or retail investors are doing this or that, I just don't believe. But go ahead, Daniel. Anything?
Yeah, I don't. I mean, I do think there is probably some basis to this, that just on the sense that if they're buying the flow data from Robinhood, Fidelity, whatever, you probably can see that, right? Because I know I didn't quote it in here, but I believe this number came from like one of the research funds. So I would believe that they did buy the data and there is basis to it. Now, are they using that information to push the narrative like you guys were talking about? Potentially.
Propaganda?
I gotta be honest.
Right.
I don't care about Intel.
What?
I don't care about Intel.
No.
Well, I was only talking about Intel because it needs to be pumped, because that's in everybody's portfolios, and it's a laggard, so they're trying to get it up now. So probably what it's trying to do is get people to sell the Mag 7 and then put the money into these laggards that they need to bring up as well. I don't know. It's speculation on my part too, as far as that goes. But I will tell you that there's a term that was used, which it seemed like the media uses it to try to tell a narrative, and they say that retail has not capitulated. As after the big meme stock craze, which they still refer to it, but not as much. You don't hear it as much anymore. But they kept trying to say retail's capitulated, and then you go several months, and then we hadn't capitulated yet, and then they say retail's capitulated. They bring it up again. They keep saying that we've capitulated, and we haven't. We're holding on to things, and I'm not about just the meme stocks that, the ones that everybody talks about, but just in general, there's a base of people who are just hanging on to a lot of quote meme stocks, and the media wants to make you think that everybody has just sold everything, and they're now going to bring all that money back into the market somewhere else. And it's just, I'm sorry, as a whole, I don't believe that. I don't think it's true.
There are sector rotations, though.
There are sector.
You can definitely see them. That's why
then they go back.
The basically options expiry. There are certain points in the year that they definitely do rotate.
They do, and I'm curious on those derivatives, the non-interest rate derivatives. How much is in that big package as part of that, just to move stocks? Let's move on to. Should we really talk about this? I guess.
Yeah, we don't have to. I know we're also going pretty long.
Is this the fun one?
This is the fun one, I guess. We're this is the last one though. I don't know. We should, before we get into the wager and end the show, but Harris Economics. So if you try to put them together, it would be Harry-nomics. Could I do that?
Harry-nomics.
Like it could be a hairy thing. I'm talking
Aeronomics.
Okay.
Let's go there.
So, Daniel set it up in the most non-partisan way. No, I'm just kidding. Set it up in the most partisan way you can there.
Eco Harris.
What you got to say there? I'm gonna let you start this one off there. Harris Economics. You know what? It's not Harris Economics.
It's
Harris-nomics. It's administration. It's not her plan. It's the 18,000 people behind her that she just basically does the bobblehead and reads it out on the teleprompter. That's what and it's basically what's been going on for years now, in my opinion. It's just you have she has to cater to the wide left, and they do that a lot over there. And how much they're going to give, how much candy they're going to give to those kids just to keep them coming to the trick or treat door, I think. And then hopefully vote for him.
Reading, right? He's reading. He's teleprompting. Right now,
I'm not actually. I should have taken time to read that. Yes, I'm trying to be as good as I can here. So, just lay it out, Daniel. What's going on here with what you laid out? You laid out a couple of points for Harris Economics.
Yeah, so I think she had like her economic plan that came out that had like 4 or 5 points, and the 2 points that were kind of like bigger talking points that I was seeing was that one of the things she promised was the first ever federal ban on grocery price gouging, because she or they believe that the companies have been hiking prices to have excessive profits. And the other one was $25K to new home buyers. And so, I think a lot of the criticism I've seen is, we'll start with the $25K to new home buyers, is that if you give a bunch of people money, we saw what happened during COVID, prices go up, people spend it, right? Which isn't bad, right? Like, I'm pro people being able to own homes. But I think, you would just see housing prices go up 25K and, just cause more housing price inflation, which we've seen plenty of over the last, 4 years at this point. So that one seems a little tough, although I support, the underlying theory. And then the other one is, I think, federal ban on grocery price gouging. So essentially they're going to limit grocery prices, right? I don't think socialism's ever worked in history that I've seen so far. All right, but I'm happy to hear the counter on that one, Darren.
Yeah, no, I'm just gonna say you won't get one. Let's break this down though, between the two big things you said. So I would like to call, let's call it the Oprah bill, if that happens. That you get 25K, you get 25K, go buy a house. I mean, if you think about that though, I think it's going to put people into situations where they'll end up they won't be able to afford the house they're in. That 25K will get them started, but they won't be able to. We'll have to see. I don't know. We'll have to see what the income is for that. There's so many details. I also will say though, and this expert is the banker here for this one, and Royce. I don't think it'll ever happen, because when people do these promises and these things when they're trying to roll it out, you remember the AOC Green New Deal and everything that was going to happen, and it's just to get votes going into an election. It's not really going to happen, but it'll get that Joe Blow and such that really loves
promises they don't intend to keep.
Yeah, isn't that crazy? So I take it with a grain of salt, and it's you have the directives that presidents can sign as soon as they're in office. What are those called? I've forgotten.
Executive orders.
The executive orders. Thank you. And that's, you see the TV with the 18 pins that they go through, and and hand the pin back. Here's a souvenir. But they do those executive orders.
Know this? Oh, sorry. Go ahead.
No, I was just gonna say I just. Hang on to it. What I'm saying though is I don't think these are really going to happen. I think it's just a please vote for me thing. Go. What were you going to say? And then I'll let Baker jump in.
Just a fun fact is that every president throughout U.S. history has used more executive orders to get something done than the previous, because the government has become more divided and less participant with each other over time. And it's like this exponential curve where I forget which president it was. It was one of the Bushes that at least as far as the chart's concerned, really started it. And then it just got crazy. It was for Obama to get anything done, he had a ton, and then Trump had even more, so it's oh man, the next one should be crazy.
Same with the debt, right? Just debts and
Yeah,
executive orders
that's
can just go
true.
whoop.
Yeah, it's one of those things where it doesn't matter which side of the aisle you're on.
No,
It's
no,
like, they're like, oh wait, that's a pretty good one. Spend money and use my power.
Here, hold my beer. Watch this. Hold my beer. I mean, that's what my very expensive beer now. But I think that is what is happening, and there's no accountability. And when you have a gridlock, because a lot of people don't know, for a real bill to stick, it's a 60-40. You have to have 60% passage, correct? Not
what are you talking about? Mandates.
Yeah.
Oh, sorry.
So which we'll never get to. And I think that's my plan too. I hear you. I don't think we'll ever get to it. We're always going to be I think there's a faction on both sides of the aisle that are working together. Some people say deep state, but it's those that are trying to control everything. And if you don't come in and run their party by having a 60%, 40%, because then, they can really do something. So it's always going to be kept in that middle ground so that executive orders get written and we live that way forever, whether or not that's actually the truth or not. But yeah, let's get back to the banker here. Talk about 25K free Oprah bill and go from there. And then we'll end up with Royce.
Well, okay. I'm just start off by saying these are absolutely asinine talking points that are just for show, and all it is to bring in voters, and then we will eventually figure out what she's actually going to do in office, even though she's come out with, and again, I'm not anti-Harris. I'm anti both of them. They're both awful. But for the country to be led by two individuals, one is a lawyer and the other is basically a career politician that have never owned a business. The vice president has no stock, no trading, no investment experience, no whatsoever. And they both want to, they want to affect like housing prices and grocery prices and all of this. I just hope if this happens that they have some of the most amazing financial advisors that have ever advised a president, because they don't know what they're doing.
Yep.
The other side's not much better, but I think from an economic policy probably is a little bit better. It comes with a lot of huge other downsides, but I'll just go point by point. You're looking at 25K off the housing. Why not just go back to what we did, in the early 2000s and just do $0 down for qualified buyers or non-qualified.
Because that still would not be enough. You can't qualify for a conventional loan without putting 20% down. The average American house is $250,000 now. 25K is only 10%. You still wouldn't qualify. So you would still have to put money with them. You still have to come up with 25K plus that 25K to even qualify to get into a conventional loan.
Okay, so then do exactly the same thing. Just do $0 up to 250K. And then after 250K, you have to come up with the rest of it.
I mean, you can already do the 3% down for a first-time home buyer, right?
I mean,
yeah, that's in effect.
Right, and that's the other thing, that the other points I was going to make is that the vast majority of what she's introducing are just slight tweaks to things that already exist. And she is currently second in command. If she really wanted to get some of this stuff done over the past 4 years, what happened? Like, why is her being in the presidential seat versus the vice presidential seat going to be that drastically different than what's happening right now?
And those are the memes that you see on right now. It's like, you had the last 3 years. Why didn't that happen now? Just one thing before we get to your voice, I do want to add, though, and I'll let you get back to the other point, is where's the 25K coming from? And then who's it going to? Because if you know that BlackRock and State Street, all these banks are buying up properties, and will it go straight from government to these banks, this 25K a pop? And therefore, once again, just like every other program that they come up with over the last few years, it goes straight from the government to the banks. So I'll let you. And there's probably
I'm going to ask that my 25K comes from Darren.
I'll write you a check. I'll write you a check.
I would like my 25K.
Oh, no need, Darren. I'll
put it in the mail.
I will forward it for you.
That's right. It's in the mail. I don't do wires. My ape hands can't quite. Anyway. Okay. So respond to that. And then if you want to talk anything about Venezuela. No, I'm just kidding. Respond to that, JP Morgan. And if you want to talk about Venezuela and how well socialism works there, then go ahead.
No, I just want to really kind of bring it to something that's a little bit more topical as far as her tax proposals are concerned, and that's the ones on the capital gains tax. Since we're not financial advisors, but this is a show about investing. Yeah, she wants to jack it all the way up to 45% on capital gains, which
but they also want to do unrealized capital gains tax.
And then there is also a 25% cap. Like, that's the part that really I can't really wrap my head around, because unrealized gains can disappear.
Yes, but money in motion can be taxed. That's how the foreign exchange market works. They charge you. That's what that margin daily financing is. They're trying to basically roll it into all their systems.
But 25% is a pretty significant number.
Yeah, it is. It is. But you got to pay off that deficit somehow, right?
That's like
I know,
spitting in the wind.
I know a few thousand people that have billions and billions and billions of dollars that would hurt their bottom line significantly less than everyone else that she's trying to tax.
Exactly.
Well, that's the other thing.
And it wouldn't do enough good. I mean, you could tax all the billionaires as much as you want to. It's still not going to be enough. And that's the thing is, and I think that, again, this is a vote thing. It's try to get a vote. You got those people who are like, I hate the elite. And that'll get their votes. This is the way to get back at the elite. I think it's just a vote thing. I don't think that'll ever happen. The taxing possible capital gains on top of it. What were you going to say, Royce, on that?
Well, there's, I hate to say it this way, there's smart money and then there's non-smart money, regular people, right? Smart money is usually a lot of people using a lot of statistics, using a lot of data to basically make their decisions. And they have the information ready at their fingertips through whatever resources that they have, right? So smart money is usually not impacted by this type of thing. It's like, okay, you're literally telling smart money, if you're now going to tax me 25% for trading in the stock market, guess where I'm moving my money away from?
Right.
And basically it becomes a self-fulfilling prophecy.
Mm-hmm.
They caused the market to crash by literally telling them, hey, don't put your money here. Just like when the Fed raises the interest rate, they're also telling smart money, it's safer to be on the sidelines than to be in this market. You're going to get a guaranteed 7, 8, 9% return on your money without risking, without drawdown, without anything. So why would you risk it if you know you're going to get that type of return and all it has to do is sit there and you're 100% liquid?
And I brought that up. I brought up the the derivatives, interest derivatives, and how much percent wise they have in that and their derivatives, all these banks. So I guess that's, like you said, smart money. Is it smart money or connected money? Which is it?
It's a little bit of both. But also, I'm going to back up and I'm going to go a little bit off the path and come back. I promise.
All right.
The average American salary to basically buy a house before Kamala and Biden got in office this last term was about 58 combined income, about $58,000. Yep. Now, just to qualify, you need $126,000 just to be able to afford the average cost of an American house, right? So, and to that point, let's shelve that for a second. Also, the federal government pays farmers not to farm, to keep produce and goods at a certain level. To ease that, all they have to do is let them farm. So this is not a hard fix. We don't have to raise prices. We just create more supply so that way it can meet demand.
Wells, who's going to be your? I want one of the T-shirts. Who's going to be your vice president when you're running?
Wells Morgan, 2024.
That sounds like another fun. No. Any?
Sounds like
did
a
you have
law
anything?
firm.
Yeah. Anything else you wanted to say before we
Wells Morgan and Hopwood?
go to the wager there, Mr. Josh?
No, just back to my other, like, kind of piggybacking off what he said. You know, there's smart money and then dumb money. I'm probably a terrible term, but a lot of these talking points are directed at no money. Like the people who don't have this excess funds to invest, don't really have 401ks, 403bs. Like, so they're looking at it like, oh man, I can get 45% of all of these that are going to be invested into, you know, tax programs that are going to benefit me. Not really realizing the global impact or the you know, economic impact of what's actually going to happen.
Yeah,
I think that's. Go ahead, Royce.
Oh no, sorry.
Wrap it up. I'm gonna wrap it up after you say what you say.
Okay. Well, then there's the other thing, millennials, right? And this is not a dig at millennials at all. 401ks have only existed for 40 years. They're literally barely millennials, barely. So that whole, hey, we got a retirement. No, they were literally pension plans. Companies actually cared about their people and made sure that their people, when going into retirement, had money. This new vehicle that they created, complete hogwash, smoke mirrors, whatever you want to call it. It's not for the people. They literally leverage your money that you put in there and promise not to touch for 30 years.
Yeah, which we all know they do touch it. We got to call HR about that.
I was going to say, I was like, don't make a joke. Don't make a joke.
I think we did quite well, though, getting through that little touchy subject with not going too crazy. Josh kept us cool. That's a good job there. I think we all did. None of us got really dirty about it. We just discussed it, I think, in probably the way that we wish our quote leaders in politics would discuss it. The one thing I do want to add there, and yeah, he's Republican. Ronald Reagan had a quote which gets repeated a lot, but when I think about what could be being put into action, that quote is, the most terrifying words in the English language are, and I know you've heard this before, I'm from the government and I'm here to help. So yeah, all right. Let's
bring in Reaganomics.
Let's move.
That's what Child Support Services said to me.
Yeah, that's right. So let's move back over to Josh, because it's his moment. He has tied the king at 7 correct wagers, 7 weeks of using the executive bathroom, and they are tied at 7-7. I lost this in the last 15 minutes of the stock market today. It flipped. All day it was doing this W pattern.
Flip. It was gradually. There was 20 cents.
No.
Cents.
Okay, don't maybe bring the chart up. There was since opening, there was a W. It would dip down easily into my channel, come up for just a second in the middle of the W, then come back down into mine, and then at the very end, right over that little moment. And I thought it would be kind of fun to be 7-7-6 or 7. It would be 7-6-6. And then with one of us having a chance to tie at the end, because this is coming to an end. And I'll bring up the scoreboard now. Bam, there it is. You will see that Royce 1, 2, 3, 4, 5, 6, 7. Daniel 1, and then Josh is now 7. Actually winning 5 out of 6. And then I'm at 4. So I actually
4 is good. 4 is good. It's respectable.
4
it was a good season.
That is very unfortunate. So we're gonna.
To be fair, I think I've probably missed 7 episodes. So
yeah, excuses. We're gonna start over though again after this next week, so that everybody starts fresh. The clean slate, and then hopefully Daniel can actually participate this time around the next 20 weeks.
I think this was my idea.
So what was the bet? It was. The wager was VOO. VOO was the wager. We'll come back to us. And do you have? No, we already. Did you already do? Yeah, you already did it. So we talked about. Did we talk about VOO? We didn't. The chart. We didn't do charts. What was our chart? I'm losing it.
It was
China.
It was China.
It was the China thing, right? Exactly. So, it
You
is
wanna bring
Josh
back
won.
FPL?
So, because we need to wrap it up. But whatever Josh is going to pick though, for
We need
the
to bring
stock
up.
this week, what are you going to pick, Mr. Winner? You've
Well,
had all that time sitting in your executive bathroom to think about it. So, what is the next stock?
I'm going to double down on my stupidity and go back to a defense stock, but it's not a Kathy Wood pick.
Nordstrom?
DFEN, just a
What's the letters?
DFEN.
Yeah.
All right, we'll go back over to.
It's a 3 times leverage defense ETF.
Oh,
I
no,
love
not a
these.
3-timer. Oh,
So we're going
I
to get
hate
a little bit of volatility there.
Well, I got good news and I got bad news.
Small channel.
No, there's about $6. So
Between
about
4 people.
$1.50 a piece. Yeah.
Between 4 people.
Hey. Pick your poison. Pick your poison. So do you see it?
Oh yeah,
So
it's up.
We got about from roughly around 25 to 35. So I'll give it. Yeah, we'll say that 25 to about 35.
What's the symbol?
DFEN.
DFEN. All right, he said that. Just wasn't paying attention. So, and then what was the channel again?
$25 to $35.
Okay, so we got 10. So basically $2.50 a piece.
$2.50 a piece.
And we'll just keep it that simple. And then Daniel picks first. I pick second. And
no.
I guess. Well, I mean, it's where the
it's Josh's choice. Josh gets to pick. Go.
We're going to be clear about this the next 20
For
weeks.
the money, Josh. For the money.
Yeah.
For
all right, Josh. But is this
Bragging
before you
right.
talk about it or no? Are you going to talk about it first with your dashboard or no? Before he picks.
I could if you want.
It's a good setup that way.
All right, fine. I'll talk about it just a little bit. All right. So let's. I'm going to start up at the top. So looks like 35 is about the top. That's just where the monthly chart says it runs out of probability. Oh, that's the weekly, actually. Let me go to the monthly. Oh, yeah. Yeah, that's the top. Going that down. It basically has support somewhere near that $26 range, but there are a few lines that are sitting out there that basically that we're going to pay attention to really quickly. Going to turn on the labels for these lines so that way we can see their names. And basically there's support right around 30, right around 29, right around 28. So 28 has a lot of support. 28, between 28 and 29 has a lot of support. 27 is the third level or fourth level of support. And then if it actually breaks through there, there's a potential it can make it all the way down to 23.66. Looking at the dashboard, basically it's saying that the buy is in danger in order for the buy to continue, for us to continue this Elliott wave ride up. It has to basically go back down and touch about 25.85, but this is a weekly chart. So this is over the course of the next 3 to 5 weeks. So we have a lot of time. It could do it next week or it could do it 2 weeks, 3 weeks from now. So it's all up to you guys.
Okay. That is DFEN, and we'll go back to our screen with the 4 ugly heads, and we will let the banker go first. What is your range?
Okay, give me the top 2 again. What's the top
30 to 35, basically.
35. Yeah.
The top 2 would be 30 to 35.
So, I mean, basically 32.50 to 35 would be the top range. And then 30 to 27.50, then 27.50 to 25.
I'll take the 30 to 27.50.
Oh, okay. Also known as 27.50 to 30. I'm an ass ape. All right, so I'm gonna say I'm gonna go 25 to 27.50. So I'll take the low end. Actually, which means 27.49 and below, right?
Yes, technically.
Yep, I'll take that all day.
I mean,
so the bottom two have been taken. You guys have to fight over the top two, and I think it is Daniel because he only has one win. So
go for it, Daniel. Do your worst.
I'll do the one that falls in the current channel.
Okay. Then I'll take the top.
A little sideways trade.
I feel like we got to find a better way because splitting this into 4 and how we do it just doesn't seem like.
Well, I thought we'd have a better range on that one, but
the bottom and the top you get more.
50 range per, but hey, from 5 to 2750, 2750 to 30, 30 to 3250. So basically, if you're taking that range, you're about 10 cents within your range because it's 3240 after the bell. So it means you're literally 10 cents for being into my range.
Yeah.
So you're at the very top of your range.
Okay, so that was for DFEN. We had a full house here today. That's awesome. It does tend to make things go a little bit longer, but maybe the host can do something about that and not give everybody a chance to talk. I'll just do the whole time. Just kidding. But good job. We covered a lot of good stuff. It'll be interesting to see how these things actually play out over the next actually couple of weeks or even up till the election, because we've hit a lot of good stuff. Again, this is After the Bell by Arbitrage Trade, and we look forward to seeing everybody next week.
Right.